It's Monday, the 14th of December 2020. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. China and Europe pledge greater commitments to address climate change as Australia gets left behind and companies have to rethink energy policy. That's our main story. Also coming up in today's podcast, hopes of a deal between the European Union and Britain over Brexit fade. Chinese Communist Party members infiltrate embassies in Shanghai, including Australia's, and no Christmas slowdown in the housing market. Later in the podcast, I talk to Paul Bloxham, HSBC chief economist, about where the year has ended in economic terms and what we've got to look forward to. But first, here's a brief look at markets. Wall Street ended flat over the weekend with the Dow Jones Industrial Average up slightly and the S&P 500 and Nasdaq both lower. A $908 billion stimulus package is expected to go to Congress tonight. That should help markets. European markets mostly ended lower over the weekend. The S&P ASX 200 index closed down 0.6% on Friday to 6,645 points. The market managed a sixth straight week of gains, thanks in large part to the iron ore miners, and particularly Fortescue Metals. Its share price ended up 2% on Friday, and for the full week was up more than 11%, as the price of iron ore hit a new 7-year high of $160 a tonne. It's a big week ahead for initial public offerings. There's 17 scheduled before the end of the year, including 14 this week, though some may well be pulled. The East 33 float, which was raising $32 million to consolidate the Sydney rock oyster sector, was delayed last week. The biggest one scheduled is Liberty Financial Group tomorrow, which hopes to raise around $320 million. Oil prices hit $50 a barrel for the first time in 9 months over the weekend, as progress on the vaccine front improved the economic outlook and potential for fuel consumption. That's 6 weeks in a row that oil has ended higher. Farewell to super cheap petrol. Gold prices rose a touch over the weekend. The Aussie dollar has had a very strong week, hitting 75.7 US cents on Friday on the back of higher commodity prices and a bounce back in the local economy. The question now is, when does it stop running, and how much damage does it do to the local economy? This morning it's trading at 75.3 US cents. The total number of coronavirus cases worldwide is now almost 72 million, with more than 1.7 million deaths. China, Europe and Great Britain have promised to significantly reduce carbon emissions, upping pressure on Australian Prime Minister Scott Morrison to make stronger commitments around climate change and changing the global business environment over the next decade. The virtual Climate Ambition Summit, held over the weekend, included a call from the United Nations to declare a global climate emergency and a push to follow greener policies as the world economy recovers from the coronavirus pandemic. Chinese President Xi Jinping said his country would reduce carbon dioxide emissions by 65% from 2005 levels. Non-fossil fuels and primary energy consumption would climb to 25%. The European Union's 27 member states agreed to reduce carbon emissions by 55% by 2030. Unlike China, the European Union is a much more diverse mix of people and interests, and achieving the target will be a challenge, particularly given Eastern European countries depend heavily on coal to power their economies. Britain has targeted a 68% reduction in emissions by 2030. Around 75 world leaders took part in the virtual summit, although US President Donald Trump didn't turn up. French President Emmanuel Macron said he looked forward to welcoming back the US into the Paris Climate Agreement, which it left earlier in the year. President-elect Joe Biden said he would rejoin. While most countries have agreed to zero net emissions by 2050, Australia is yet to do so, and it's becoming an outlier in the fight against climate change. That's despite a CSIRO report last week saying solar and wind were the cheapest forms of power generation in Australia, even after taking into account the cost of storage and transmission. Mr. Morrison is under pressure to nominate targets for Australia. For business, these global pledges have real outcomes and real costs. Business will need to account for its use of fossil fuels in supply chains and production. They'll have to shift to renewable energy in coming decades, which will impact their investment decisions today. It will have big implications for the oil and gas companies, among others, and shareholders are increasingly expecting more from management around the environment. In a moment, the rest of the news you need to know this morning. Overseas news first up. Brexit negotiations continued over the weekend with a deadline extended once again. According to the Financial Times, the talks were heading in the right direction, and the main sticking points were around creating a level playing field for tariff-free trade and EU fishing rights in British waters. While they may be talking, British Prime Minister Boris Johnson said the most likely outcome was a no deal between the two sides. That's already had an impact with a rush on supermarket goods in Britain. People have already begun stockpiling, worried that many items won't be available after the 31 December deadline. Fresh vegetables are likely to become scarce fairly quickly. Borders are likely to be slow and movement of people delayed. This week in the United States, electoral college votes will be officially relayed and President-elect Joe Biden will be formally appointed the 46th president. But that didn't stop protesters across the country over the weekend, claiming that the November 3 election was stolen from Donald Trump. Joe Biden will be the next president, but there's great damage being done by Donald Trump at the moment. His supporters will play a role in American politics for some time yet. Also over the weekend, the Supreme Court threw out a Texas lawsuit calling for the rejection of 20 million votes across 4 states. Drug maker AstraZeneca, which hopefully has developed the primary COVID-19 vaccine for Australia, will buy US biotech group Alexion for $39 billion. And the United States will commence the rollout of the Pfizer-BioNTech COVID-19 vaccine tonight after receiving Federal Drug Administration approval over the weekend. The US has been the hardest hit by coronavirus, with 16.1 million cases and close to 300,000 deaths. On to local news. The Chinese Communist Party has infiltrated the Australian, British and United States consulates in Shanghai, with a government-run recruitment agency putting advisors into the embassies for more than 10 years, according to the Australian newspaper. A whistleblower in Shanghai has leaked the names of Communist Party members, and according to the newspaper, at least 10 consulates have party members employed as senior political and government affairs specialists, clerks, economic advisors and executive assistants. It isn't clear whether any have spied for the Chinese government, though it's concerning that so many consulates have party members on the inside. A number of large corporates, including Boeing, ANZ and AstraZeneca, have also employed Communist Party members. CSL and partner University of Queensland have abandoned their coronavirus vaccine trial after participants returned false positive results in HIV tests. Basically, the drug under development interfered with HIV diagnosis. The federal government had committed to buying 50 million doses of the vaccine. Ironically, the decision to drop the trials means Australia is more likely to push to get the Pfizer-BioNTech vaccine, which is already being used in Britain. Prime Minister Scott Morrison said the government was moving to secure an extra 20 million doses of the AstraZeneca jab, which has proved effective and passed some countries' regulatory processes already. Westpac held its annual general meeting online, of course, on Friday. Chairman John McFarlane, who has one of the more challenging jobs in the sector, promised to restore to shareholders a steady stream of dividends next year. He also said the bank hadn't moved fast enough to address non-financial risks. Shareholders were supportive of the bank's remuneration report, which gave 0 short-term bonuses to senior executives. For Westpac, the long process of recovering its reputation and financial performance finally begins. AUSTRAC, the anti-money laundering watchdog, said junket operators who brought Asian gamblers to local casinos had been exploited or infiltrated by criminals and foreign agents, thereby exposing Australia to a high risk of money laundering and terrorism financing. The report will pressure the Star and Crown Resorts, the 2 big casinos, to end their arrangements with junket operators. These visitors are big spenders at casinos. Union membership in Australia is on the slide. Bureau of Statistics figures show that membership fell to 1.49 million from 1.54 million 2 years ago. That means just 14.3% of the workforce is unionised. Back in 1994, 40% of workers were in a union. Some of the biggest falls in union membership came in the construction industry and low-skilled sectors. On the other hand, teachers and academics are the most unionised sector at 31%, followed by the public service at 28%. December is normally slowdown time for the auction market, but that's not the case in this incredible year. The volume of auction listings in Melbourne and in Sydney rose over the weekend. The preliminary clearance rate was above 75%, Canberra's clearance rate was 87%, Adelaide was 76%, and Brisbane was 64%. Virgin Australia CEO Jane Herdlicker has told employees she won't be paid until July, and when she is paid, it will be below market rate. Workers at Virgin are in the middle of a voting period on new work agreements, which would reduce pay and conditions, according to the Australian newspaper. Pendal held its AGM on Friday and said it would invest in product development, particularly ESG, that's environmental, social and corporate governance, global distribution and technology. Chief Executive Emilio Gonzalez said costs would rise around 9% this financial year as part of the group's efforts to increase funds under management by around 50% over the next 4 years. Its share price fell 4% on Friday. Zipco has done a deal with Facebook, which will allow small and medium-sized businesses in Australia to use Zip Business to pay for their Facebook ads. Zip's share price ended almost 2% higher. Nickel miner IGO's share price jumped 19% on Friday after it raised $700 million from investors to fund its acquisition of a 25% stake in a lithium mine and a 49% interest in a lithium hydroxide plant in Western Australia. McWilliams Wine Group is up for sale again. The $46 million rescue package of the portfolio of wineries, vineyards, stock and brands collapsed last week. Creditors are still owed $40 million. Figures from the ABS show that casual workers accounted for around 2/3 of all people who lost their job in the early COVID-19 period. Around 800,000 jobs were lost between February and May this year. Afterpay signed new deals with a range of Canadian retailers. Further moving into that market, the Buy Now Pay Later group said consumers were buying more sweaters, jeans, dresses and coats as the country heads into winter. Its share price jumped 5% on the news. It's the best performer on the S&P ASX 200 over the past year, up 250%. And the Australian Financial Review points out that Andrew Forrest, founder and major shareholder in Fortescue Metals, made around $326 million each day last week as the price of iron ore surged. He's now worth more than $25.5 billion. As we head into the final few weeks of 2020, the Australian economy is in nowhere near as good a shape as we'd hoped heading into the year, but much better off than where we thought we'd be 6 months ago. To talk to us this morning about 2020 and what to expect in 2021, I welcome HSBC Chief Economist Paul Bloxham. Paul, welcome to Fear and Greed.
Great to be here.
So, how do you characterise 2020 from an economic perspective?
Oh, it's been an extraordinary year, unprecedented in terms of the event that we've had to deal with. A global pandemic, the first we've seen in a century, hitting a global economy that's a very different type of global economy to what we had a century ago back in 1918-19. So the lessons were pretty limited anyway. A very services-based economy, a very interconnected, globally mobile economy, and an enormous shock that essentially stopped people from moving, travelling, enforced social distancing, and has delivered the single largest negative economic shock the world has seen since at least World War II and probably since the Great Depression. So an extraordinary year in the scheme of things.
How do you think Australia handled it?
A lot better than a lot of others, particularly a lot better than a lot of the Western economies. Now, in fairness, I think that a lot of that came from benefits that we have, natural benefits we have. We have this great benefit of geography. We started writing about this at HSBC back in March of this year, that, there would be great benefits, but also some costs from being distant islands. And so it sort of referred to Australia and New Zealand. And the great benefit, of course, is that you can close your borders and stop and constrain the extent to which this virus was actually going to get in and limit the numbers of people that you were going to have to deal with having the virus and so on. And that having that ability to deliver a hard border has been a significant advantage. It's kept the problem a lot smaller. We've also had some other geographical advantages, I think, that are worth sort of pointing out. That we're basically a population of 5 major cities that are all separated by thousands of kilometres. So you can use that to contain things. And even within our cities, urban density is very low. We mostly live in the suburbs. We don't live in apartments. We're all not packed into the middle of our cities like a lot of other places in the world. And so once you got people to social distance, move out to the suburbs, you were separating them and social distancing them by virtue of that factor. So that was really important. And then in addition to that particular policy, which I think was probably the most powerful one in terms of managing the virus, I think a lot of the other policies have been very effective as well. Obviously, the lockdown measures when required, the social distancing protocols, and then for the economy, I think we've done a very good job. We've delivered an enormous amount of fiscal stimulus to support the economy, monetary stimulus as well, essentially to put the economy into this state of hibernation while all of this was going on so that it could sort of be ready to go when the virus has passed and we're able to reopen it. So I think hands down, and you look at how Australia's performed relative to the Western economies, it's done superbly well. There are some countries in Asia that have done comparatively well as well, but certainly compared to the West, Australia has done very well.
So are we in, as we head to Christmas and New Year period, are we in better shape than you thought we might be 6 months ago?
Look, 6 months ago, I mean, the main thing that I was writing was that there was a huge amount of uncertainty. I mean, in fairness, I mean, we just had this global pandemic that hadn't been predicted, that was delivering this enormous shock that we, had to learn to understand. And so at the time, I mean, your listeners would recall that economists were talking about, will it be a V-shaped recovery? Will it be a U-shaped recovery? Will it be a W-shape? We were doing this in shapes because we weren't very certain about exactly how to numerically put figures on what was going to happen. So we pitched that 6 months ago that it would probably be a U-shaped recovery. That's how we were sort of framing things for Australia. And we came to that conclusion on a couple of different ways. One was that once we got the virus numbers down, we'd be able to reopen the economy. But Australia never went for an elimination strategy. We went for a suppression strategy. So we thought that actually suppressing the virus would mean that it would still take quite some time to reopen, and the reopening would be gradual enough that it would be U-shaped, not V-shaped. By contrast, New Zealand, for example, hard lockdown elimination strategy, we have had in mind for New Zealand from the beginning that it would be a V-shaped recovery. And so we were thinking about a U. As it's turned out, it might look a little bit more V than we'd actually been thinking earlier. Despite the fact that Victoria went into a hard lockdown through most of Q3 or through Q3, we've actually seen a stronger bounce back in the rest of the country. So a lot of the rest of the country perhaps looks a bit more like New Zealand. They didn't really they got rid of it pretty quickly, didn't have a big virus effect and have bounced back. And so somewhere between a U and a V-shaped recovery is what we're getting, having thought we'd get a U-shaped one.
So long as there's a recovery. Paul, thanks for talking to Fear and Greed.
Great to be here.
That was Paul Bloxham, Chief Economist at HSBC. That was only the first 5 minutes of my interview with Paul. The rest focuses a lot more on the future, what's to come in 2021. You can skip forward to the 5-minute mark to hear all of the new material. It's worth a listen. That's it for this morning. It's the final full working week of the year. The politicians have left Canberra and the business community are in wind down. There's a bit of economic news around, and Brexit and the rollout of COVID-19 vaccine will dominate the international agenda. It's Monday, the 14th of December 2020. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.